Namaskar, this is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. A recent statement from the Ministry of Finance says that India's investment story in the foreign investment circles continues to expand. And that, it says, is demonstrated by the rising trend of inflows in India of FDI, which is foreign direct investments, of FPI, which is foreign portfolio of investments, and also of foreign investments in India's corporate bond markets. It says that these rising inflows from foreign investors indicate and underline the belief of the foreign investor in the strength and resilience of the Indian economy. The ministry says that the COVID pandemic has adversely impacted the investment climate in all economies of the world, and it says India was no exception. But then the ministry says that India's investment climate has been buoyed and boosted because of active and frequent intervention and measures taken by the government in order to boost investments, in order to boost the economy, despite the impact of the COVID pandemic. And that, it says, is the reason why, despite a pandemic and despite other countries facing a dip in investments, in the case of India, foreign investments have gone up. The ministry statement further says that in respect of foreign portfolio investment, which is the investment of money from abroad in India's stock market, it says this investment, FPI as it is popularly called, witnessed a significant increase. In the months of October and November in particular, the statement says there was a massive jump of FPI inflows in India's stock markets, and most of it was in equity stocks. At the end of November, the FPI investments into India were at an all-time high of 62,782 crores. And the ministry says that on one single day in November, which is on the 12th of November, there was an inflow of 11,056 crores of foreign funds in India's stock markets. This kind of a huge surge of foreign funds in India's stock markets perhaps explains why our stock markets are on fire now. There's been a bull run which doesn't seem to subside at all. And that's because money keeps pouring in India's stock markets from abroad. This was about FPI inflows. About FDI inflows, the government says that foreign direct investments in the country have gone up by 15% during this period as compared with the last year. In the first half of the current financial year, the government statement says that India witnessed FDI inflows of $30 billion, which is 15% more than that of last year. It has been the highest inflow since the last 7 years. And just the month of August, it says, showed an inflow of $17.5 billion of FDI in India, which again is a record of sorts. That's the kind of FDI which has also been flowing into the Indian economy, along with FPI that has been coming in. And the Ministry of Finance says in a statement that these rising numbers of FDI and FPI inflows in India have been primarily because of FDI reforms undertaken by the government from time to time, because of what it claims there is an improved ease of doing business into the country, and also because the government has been actively facilitating the inflow of investments into the country. In our opinion, as far as the surging inflows of FPI in our stock markets are concerned, it's actually a matter of concern and nothing to be really so satisfied about. FPI money is hot money, risky money, temporary money, and it can go out with the same speed with which it has come in. There are no barriers to its exit, and it is meant to exit at a short notice whenever these investors choose to do profit taking. The reason that FPI money has been coming into India at the moment is because the world is awash with cheap, zero cost, low cost, or negative cost funds, and they don't know where to go. And a very minuscule trickle of it has been coming into the Indian stock markets and has created what we call a false bull run. It's a false bull run because the indices that keep going up are actually disconnected from the real economy, the real corporate performance, and there's no justification for the price rise that we see on the Sensex and the Nifty every day. FPI coming in is a situation where it can go out with the same speed with which it came in, and when it does that, it only leaves a trail of losses, a trail of bankruptcies. So it's a matter of concern as far as we are concerned. In respect of FDI, it is certainly a matter of satisfaction. When more and more FDI comes into India in large numbers, it is a matter of satisfaction. It shows that foreign investors are willing to take a long-term shot, a long-term perspective in India and are willing to invest here. It certainly benefits the nation. But then, if you look at the FDI story, the FDI seems to be primarily flowing into large companies. And as far as the story for FDIs and startups is concerned, it is a completely different story. The India story may continue to inspire FDI in large companies, but when it comes to FDI, foreign investment in small companies, it's an entirely different story. A report says that more and more foreign investors have been insisting that whenever they invest in Indian startups, the ownership of the company, its assets, its IPRs must be relocated abroad and not in India. The Naukri.com CEO says that India at the moment faces an East India company-like situation where everything is Indian. The market is Indian, the customers are Indian, the workforce is Indian, the developers are Indian, but the ownership is in foreign hands. He says that is the situation of startups in India today, and that is the perspective of the foreign investors. So the report says that more and more foreign investors, more and more foreign funds who invest in startups are insisting that the ownership of the startup should be located abroad, despite India being the main market, despite the fact that the very idea of the startup was perhaps conceived and executed in India. They yet say relocate abroad. The fact of the matter is that by and by, as experience shows, more and more foreign investors do not want to deal with the Indian regulators, the Indian administration, the Indian laws, the Indian authorities. And they can do that. They have options to exercise when it comes to startups. The company has really not taken a shape as yet, and it is easy to relocate it abroad as against an established set company. So when it comes to startups, the foreign investors say relocate the ownership, relocate the IPs abroad and bypass the Indian regulators. What is very clear is two contrasting realities as far as foreign investments are concerned in India. The perspective of the foreign investor is different when it comes to investing in a large enterprise, and it is entirely different when it comes to investing in an Indian startup. To us, a very clear picture emerges from these contrasting realities. And the first is that whatever the government may claim in respect of improved ease of doing business in India and governance issues, the reality is otherwise. The fact is that the government may claim that it has been reforming, but the reforms have not changed things at the ground level. And that is particularly impacting small enterprises, the startups. The startups cannot withstand the vagaries, uncertainties, and volatilities in dealing with the government and changing laws. And therefore, they prefer to be located abroad. Imagine a startup with a brilliant entrepreneur getting caught in government notices of taxation, for example, by virtue of which its cash flow is sucked out by the government. Foreign entrepreneurs recognize this reality. They need the startup entrepreneurs to focus on the main activity and thus take them away where they do not get defocused because of government issues. On the other hand, the big companies with influential promoters can certainly withstand the vagaries of the government, the uncertainties of dealing with laws and the government. And the big investors know that they can deal with it. They don't mind investing in those entities. So the first is a contrast because of the impact of ease of doing business. The second is, if more and more startup PE funds and their investors insist that the Indian startup ownership must be located abroad, that means there will be an exodus of some sort of brilliant, raw entrepreneurial talent from India, which is not the best of things for the country. And then, if this is the situation, it's going to show that inequalities will keep building up. The existing big entities in India who keep drawing big chunks of foreign investments will only grow bigger, and the smaller ones will only go away from India, and the scenario will become even more different. We are going to witness a buildup of further inequalities. The other issue that emerges is that with foreign investors insisting that startups be located abroad, if a startup is successful, the wealth is going to be created abroad, the wealth is going to be located abroad, and it will deny India of its legitimate wealth, as happened in the case of the East India Company that the Naukri.com CEO quotes. We are being denied of our own wealth because of foreign investors saying that the startup must be located abroad. It indicates that foreign investors lack trust as far as trust in the government as far as investment and startups are concerned. And that's why when it comes to the big ones, when they know that the promoter is influential, they don't mind pumping their money in India. But when they know that it's a startup and the promoter is some brilliant engineer or brilliant entrepreneur, but he's so small that he can't influence the government, they say, locate yourself abroad, locate the company abroad. And that's the kind of contrast that we are seeing. This is Akhilesh Bhargava signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.